Welcome back. You're still watching Finweek Money Matters. Remember, this is the show that helps you manage your finances. Our resource stocks have had a terrible ride and is now trading at the lowest levels relative to the market since the late 1990s. Before the start of the commodity supercycle back then, while we've seen iron ore and coal prices more than half from their 7-year peaks, now platinum miners continue to struggle, with the world's third largest producer, Lonmin, recently announcing 3,500 planned job cuts at its South African operation. Well, I'm still now joined by Finweek contributor, that's Moxima Gama, and Finweek editor, Jana Marais, is with me at the desk. Ladies, thanks for your time. Moxima, before I come to Jana, let me just pick up with you. Looking at the different sectors, resources, they are seen as this unloved sector. Relative to the other sectors here, what is an investment case for resources? Is there even one?
Look, there is. Now remember that I look more on a sentiment base, but I will touch on a bit of the fundamentals. They've been knocked down. Remember, they've had, in all angles, in not just the commodity price, but also just operations in the company, like you mentioned, job losses and strikes. So they've been beaten down quite a lot. And sometimes when a stock has been beaten down, it will hit those levels, but it also works out a bit cheaper because although there has been such negative news flow about it, it does tend to be attractive for people who try and catch it on the low for some investors because it's all cyclical. And in some cases, at this point, it looks like the finances are the ones that are now the trend to be in. But when that gets exhausted, then you'll find your resources coming in. So I would definitely feel from a sentiment base or an investment base that resources are probably, at this point, a good time to start nibbling into them.
Jana, this is this week's cover story, the resources. If I was somebody that was really looking to invest in this particular sector, before we go into the pros and cons of it, what should a person be looking at? Because we've seen headlines around, low productivity, inefficiencies. What should I be thinking about before I even start going, okay, I'm going to maybe take my chances here?
Look, I think Peter Major put it quite nicely in our story, we're quoting him there, and he said a big problem with a lot of the mining companies have been over the past few years. They got so used to these abnormally high commodity prices that, their business models, there's been a lot of fat built into it. And I think that's why we've seen so much pain in terms of mine closures and retrenchments and all of that. So I would say, a very easy thing to do is to go and look at the companies who made it through this massive slump without having to go through those painful restructurings. And one of the examples that come to mind is the company like Randgold Resources. A lot of the mining companies reported losses, especially last year was a terrible time for gold mining companies. And they've been managing to kind of stay in the black. They've continued to pay out dividends. They continue to build new mines and they bring them up, online within budget, within time schedule. So something tells me, that's probably a company you want to go look at a little bit more. It looks like the management team knows what they're doing. So yeah, I think, high commodity prices, as Peter Major says, hope is not a business strategy. So the ones who's been able to do well, regardless of what's been happening with prices, those are probably going to be my first port of call to look at.
Moxima, now talking about investing, South 32 listed this week. There was a lot of hype around it, whether or not they could make this work. In your view, was the stock overhyped, and do you think they could make it work?
Look, it's at least piggybacking on BHP Bulletin, which has, it's like I said, withstood the test of time. So at least it's got that big brother behind it. At this point, because resources and investors have kind of lost a bit of hope in resources, bringing up something like this brings a bit of solace into the mining sector. So I would think there is a bit of hype. It happens with a lot of the shares. Looking at it on a technical aspect, it's new. I don't have any data to foresee its future. But with BHP Bulletin has been an outperforming metals out of all of the mining stocks, so it is a good share, at least it's piggybacking on. I would think it will actually do well. There needs to be diversification, and by doing this, at least Bulletin is giving a bit of diversification, and it shows a bit of expansion as well.
If I can add to that, perhaps, I think one of the big things that people are quite excited about is to see, it's kind of BHP's second-tier asset, so to speak, so they haven't gotten a lot of management love and attention in the past. So it would be very interesting to see under a dedicated team, similar to what we saw with almost with the Goldfields Sibanye spin-off. You know, can these guys, when they really put a lot of effort and attention and perhaps extra money into these mines, will they outperform?
Yeah.
And then of course there's no iron ore exposure in South 32, which I think a lot of people might be quite happy about as well.
Yeah. It's a diversification, and putting that shows that they are rebuilding the model from what Jana had said, that there was a lot of fat built in. So it's showing some type of diversification, which is pretty good. I think it will be well received, and it will do pretty well.
I want to now talk about the issues that are currently facing the mining industry. Let's not talk about all those cons before we go and talk about some of the good things about it. Jana, in this issue, you do cover it extensively. Hope is not a strategy, so what are some of the things now that one needs to be aware of?
How much time do you have? Look, I think one of the big things, of course, is price. I mean, ultimately, commodities is a price and volume game. So I think prices, and as you've mentioned as well in the intro, you know, we've seen iron ore and coal prices go down almost 70%. Now, that's a massive, I mean, we saw something similar happening with oil, and just the volatility of it as well. It makes it hard to plan. So I think that's one issue is prices. So I think to a large extent, we've seen companies adapt to a lower price environment. And then, of course, I think if we look South Africa specifically, we have additional issues on top of that we need to deal with. And one of them, of course, the labor environment, which is always an issue in the mining sector. We're going into wage negotiations in the gold and coal sectors, and we've already seen massive demands from the NUM on the gold front. I think something like 80% increases for entry-level workers. I mean, and we can debate the merits of that, you know, but the point is that's a huge percentage, and there's a lot of instability, you know, there's all concern rather about how these negotiations are going to play out. I think the other thing is energy, of course. I mean, I just think myself having to run a one-man household with load shedding. Imagine sending, you know, thousands of people underground every day, and you're struggling with, first of all, security of supply, and then, of course, the costs that have just been escalating. So I think that's a huge issue. And then lastly, I think the regulatory environment in South Africa, and we keep talking about this, and I know we've talked about it before on the show as well, is just uncertain, and we see it with the mining charter and concerns around empowerment and ownership. So yeah, so there's a lot of things that will give people sleepless nights in this sector.
Moxima, I don't know if you want to add to that, but after that, what I'd like to find out from you is, are there any mining companies at the moment that offer some glimmer of hope? So she's given us the doom and gloom. Maybe you can try and say, you know what, there is light somewhere.
Okay, I'm still going to base it on sentiment base. In terms of just looking at it in a technical way, there are a few, and it's a term called bottoming up, in terms of they've been knocked down, and if you have to add sentiment to it, such stocks are attractive, and you'd probably want to invest in something that is at a very cheap price at this point. So despite, you need to also put into perspective that there's a lot, these companies they kind of grow from, or they learn from the experiences, and once they start adapting to that, then they become more attractive, and it's usually best to get them at the point when they are little dog stocks. The ones that I would probably be looking at would be like the gold stocks, which have been at the lowest for some time. But in other words, the metals though, like the BHP Bulletin is actually doing better than most of them. But if you wanted to nibble into resources, you'd start off with the gold and then go back to the metals. I still believe there is still upside, actually even recovering most of the losses in the long term. So I wouldn't really discount or disregard metals at this point, but you would really want to pick up on them gradually, because the commodity prices are still down, but I mean, they can't go any further down. I mean, they could, but we're seeing a lot of consolidation, and in consolidation, that's the time to just get into the stock.
You're just speaking about the outlook for it, so it sounds as though it could be positive. I want to talk about new markets here. China, there's been a red flag around that, whether that economy is slowing. It's moved from being more consumer-driven as opposed to infrastructure. With that in mind, Jana, how is this a worry for you when you look at it at a market like China, or are there other markets out there for commodities to be pushed to?
Yeah, look, I think the Chinese story has just been an incredible story, and if you look at the super cycle in commodities that we saw from the late 1990s to around 2008, I mean, that was completely a China story. And I think to a large extent, I mean, I think that massive urbanization drive, which really drove commodities like iron ore and coal. Probably from a Chinese perspective, that certainly, that massive, historically unprecedented boom is probably over. But I do think, we'll see urbanization and development in other regions. India, I think, is probably going to be the next big one, which will have an impact. And then, maybe longer term, what's going to happen on the African continent is also going to have a massive impact on commodities. Hundreds of millions of people are expected to move into cities, and that will have infrastructure needs, which will require iron ore and commodities like steel and so forth. But I think, perhaps it's you need a bit of patience. I think, some of the value investors said, it's an absolutely great time to buy into commodities, but you must know that it's going to take you 5 to 9 years before you really see the returns. And perhaps just one more thing on the iron ore side, I think, and it's a good example of how these sectors work, because you see the prices spike and all of a sudden everybody's building new mines to increase supply. And I think in iron ore we've seen so much supply come on stream that it's really been suppressing the price. The demand might still actually be quite healthy, but the supply has just absolutely been flooded. So, the market has just been flooded with new mines pumping out iron ore. So you kind of also have to look into the specific commodities more rather than just paint them all with the same brush.
Moxima, just a final one to close off with. Do you think that mining companies have adapted? We've seen these negative headlines, we've just been speaking about them, job cuts being some, or do you think there's more bad news still to come?
Look, they are in the process of actually just, healing the wounds from all that's happened. So in that process, there would be some volatility, but it's good that they have been through that process, and that's one of the stocks that you really want to. I get a bit concerned when you get into a stock that just all it does is surge. Once it has grown from whatever that has been beating it down, it then shows a lot of sustainability, and if they could still sustain all of that then to me is a good stock to purchase. So although there is a lot of risks that you'll probably get yourself into, but as Jana said, in the long term, they make quite good purchases. It's not something that don't expect it to go up this year and sit back and enjoy your killings. Just know that it's a gradual upside, but it's one that will be worth it. And like I said, it's quite cyclical. So the time for the resources is slowly getting in where investors will get out of a specific sector. I would think financials and into the resources. So you just sit and wait and we shouldn't be impatient with this. There is upside.
Sit tight and ride that cycle out. Ladies, thank you so much to Moxima Gama. Of course, she's our Finweek contributor, and to Jana Marais, she's the Finweek editor.